Jobkeeper stopping home loans. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. Remember last year when we were talking or warning about mortgage brokers not being able to get home loans for people if they took the deposit or $10,000 or $20,000 from their superannuation. We know a lot of people took that money and would have used it to get into a house. And you can't blame them, considering, the government's pretty much proven that they will do anything they can do to support the housing market. So, this is going to be an interesting one. Potentially, Jobkeeper is stopping you from getting home loans. How could that possibly happen here in Australia? Let's have a look at this article from Yahoo Finance. So, last year's Jobkeeper payment announcement and this year's Jobkeeper 2.0 was a huge relief. So it was unveiled. Okay. They helped millions of Australians across the metaphorical bridge as Prime Minister Scott Morrison urged us to view it to the other side of the coronavirus crisis. It doesn't feel like we're at the other side of the crisis. I'm sure all the people who are struggling with their businesses don't feel like they're at the other side of the crisis, but there you have it. Okay. They haven't yet, but hopefully they will eventually. We know that it's all at significant national cost. Well, yes, it certainly is. I'll just bring up this chart here to highlight how much state and federal government debt we're going to have. Awesome. I'm certain we won't see this paid off in our lifetime. Honestly, I don't think any of us will see it paid off in our lifetime. So, in the new kick the can down the road philosophy, budget deficits aren't nearly as on the nose as they used to be. But at what personal cost? At what cost is government assistance? The good news is that the Australian Banking Association and its members issued a guarantee early last year that mortgage repayments holidays would not affect your credit rating. Indeed, your repayments have been recorded in a different way for that purpose, or in a large part. Okay, so there you go. Well, that's nice of them, isn't it? Now, who are just bringing up this organisation here, the Australian Banking Association. Now, for those of you that aren't aware, we'll bring up this organisation here. They're an association and essentially a lobbying group for the banking industry. Now, you could ask yourself, do their interests align with our interests? I'm sure it does. I'm sure the banks are always buddy, great friends with us. What do you reckon? But the shocking news is that some people in receipt of government income assistance, as well as the government stimulus boost, have that as an almost permanent block on their record. If you are an employee on pay-as-you-go who received JobKeeper, but your hours are back to normal, that's fine. The issue comes if you instead operate through a business, even if there's only you in the business, okay? So, how can your finances be hurt? Where this is a worry is getting a loan, especially a mortgage. It's already been challenging for small business operators to get finance approved, or it's a nightmare. Anyone in small business can know it's quite challenging. The assistance that was extended makes it even more difficult, really. Not just JobKeeper, but the stimulus boost of a minimum $20,000 up to $100,000 is deducted from your income that's considered when calculating your ability to service a loan. It will only be for that period, I'm imagining. So what you got to wait another year? It's not the end of the world, is it? This is because it's not income earned by the business from trading activities. That sounds fair until you realize that for many businesses, all of a sudden, there were and are no trading activities. Presumably, the same treatment will apply to the new $750 COVID-19 disaster payment. Ruling out all that income and the small business stimulus boost could well see your home loan application denied. But it's not just your income that could kibosh you. So what else counts? Though the government wants to relax borrowing rules, this has been met with opposition in Parliament. This means what I call the Netflix test on your spending still applies. Now, I've spoken to mortgage brokers about this type of thing, and they're quite frustrated and annoyed at the amount of effort, time, and energy they need to spend to get people to borrow. to borrow people. Now, here's the thing, guys. This isn't fair. It's not fair. The more not brokers really, the employees of the bank who are helping assess you to get a loan, they don't need to jump through the same amount of hoops or rigmarole as the mortgage brokers. What happened to personal accountability? What happened to people taking responsibility for their own lives and their own finances? I guess that's not a thing anymore, Just showing my age. A potential lender will troll back through your spending of the last 3 months. Be super aware of this if you're clicking from the couch or shopping websites in lockdown to see exactly where your money is gone. The idea is to catch your every indulgence and convenience, and you may have a few extras at the moment. This is what the government and powers that be are insisting that the banks do. Or the brokers do. This is stupid. Really. This is what happens, guys, when you keep asking for a bloody nanny state. When people go to a current affair again and again. Oh, the bank lent me too much money, so I bought all these houses in a mining town, and it all went to shit. The bank is so mean. How dare they lend me money to try and make money? I mean, come on. No wonder you got people loving these lockdowns. The government's taking care of us. I'm so scared. They're lucky we have the government taking care of us. The 12 categories on which you commonly need to report are groceries and household expenses, clothing and personal car, owner-occupied utilities and rates, investment properties, insurance, transport costs, telephone, medicine, education, childcare, recreation, sports, child maintenance, and other. Also be aware that in the other category, they will consider any buy now, pay later facilities. Your balance needs to be zero. There you are. Better still cut up and cut out these accounts. All of the above will be tallied and netted off your possibly reduced income that has been left for a loan. So what can you do about it? The final element in your home loan application is to find out that shock things a lender will look for before approving your loan. Make sure your report is squeaky clean and your score is as high as it can be before you apply. And if you get knocked back for a loan, don't, whatever you do, simply apply to another lender. First, find out why. There's not much you can do about your income history, and amounts ruled out because they were government income assistance and stimulus, but at least you can try to rectify your spending. Living a more frugal life in the 3 months before you apply could pay well for you. Well, maybe it could be, learning how to live within your means. I don't know. Maybe I've been watching too much Dave Ramsey. Maybe that needs to be required viewing here. Just be cheap for 3 months. She'll be right, mate. You'll get that loan. Borrow that $1 million. But still some good advice there from Nicole. But come on. What do you reckon, everyone? What do you think about this one? And what's the solution to this? Well, honestly, I would say that you need to get your debt under control. Number one. That should be the number one thing you should do. Aim to get rid of all your debts as fast as possible. Look, there are different strategies that people use. The snowball method, or where you pay the smallest debt off first, and it just gets bigger and bigger and bigger. The advantage of that is you get a psychological benefit. You ignore interest. You just want to hit goals to reduce monthly payments. And you should just be living frugally anyway. If you're using Afterpay, if you're using credit cards and other debts, you're obviously living beyond your means. We've all been there. Maybe I'm hoping some people will come out of this recession and this lockdown and this new life with a new set of financial management skills. You think I'm being a bit naive? We'll have to see. But that'd be my suggestion. Get your debt down first before you do anything. Then change your habits. And then once you learn how to live like a frugal person, well, maybe you don't need that extra luxurious house. Anyway, let me know your thoughts, opinions, and solutions to this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.